Welcome to my live stream. In this live stream, we're going to talk about stocks and from a perspective of a long-term investor that looks at fundamentals, looks at the value of a stock based on free cash flows, based on earnings per share, compares those valuations to the current stock price and sees if a stock is a good buy or if it's a sell. That is the perspective I take. And in this stream, we're going to be covering a number of stocks. We had some good earnings today. We had some interesting stocks that went up a lot today. This week, we've had a flourishing stock market. Stocks went up a lot Monday and today, Tuesday. The market has closed. And it was a little bit of a surprise for me. On Saturday, I found out that the US had airstrikes on Iran, which was a big deal in the news, and it somewhat was a big deal in my mind. So I went to bed on Sunday night thinking that Monday we would have a sell-off. That didn't happen. We actually had a market that went up. On Tuesday, I wasn't sure what was going to happen, but lo and behold, we had a really nice day on Wall Street. The Nasdaq went up 1.43%. The S&P went up 1.11%. The Dow was up 1.19%. The Russell participated nicely. So there was some stories that were concerning. The U.S. entering the conflict between Iran and Israel. I mean, that was big news for me. Didn't know what was going to happen. Was Iran going to retaliate? And I thought oil was going to stay elevated for a while, but it didn't. So interesting how the market has pretty much processed that news and deemed it to be not consequential to the stock market. So that's how the 2 days have gone. Surprising, but if the market's going to surprise me and load up my portfolio with gains, I'm okay with that. Year to date, I'm doing well and performing really well this year. I did really well last year, the year before, and the year before. So I'll take it. I'll take it, but I am creating a bigger cash pile. It's a good time for me to increase my cash position by selling high on a few positions. If you want to know what those positions are, become a member. I recorded a video and released it out to the community of paid members, and they could see which stocks I've trimmed back. And over time, I'll probably trim back additionally to create even more cash. And the reason for it is, as the month of April taught us, things can be going really well, and then the market can really take a slide. And the market sold off on the S&P by almost 19% rather quickly. I don't think that's going to happen again in 2025, but we could see something of a 5-10% move. And I want to have enough cash to take advantage of that, especially since some stocks get sold off quite harshly during those times. So that's where I'm at. But you know what? It's good times on Wall Street. If we look at the fear and greed index, we have a measure of greed. We're officially in greed. And we were operating in greed. Looks like a month ago, we were in the greed zone. A week ago, we were neutral. But I think some stocks are getting frothy. And I would say some stocks that I own are getting frothy. And looking at those stocks, making sure, is those stocks that I want to hold for a long time. So that's a good problem to have. I'd rather have a stock that's gone up too high and I have to really be critical and see if I have to sell it, as opposed to, hey, a stock's really, really gotten taken down and I have to decide, should I sell? Good to see you, Cream Biggins. Thanks so much for joining. Let me know if there's a stock out there you want me to take a look at. I've got a nice long list of stocks that we can cover, should no suggestions come on the board. All right, so the market performed really well. Just looking at some big headlines, there's some things that are trying to get done. One of them is that spending bill. And the spending bill is probably going to be good for the stock market because it's probably going to lower taxes and just get done to begin with. That should be a good thing. And we'll see how this conflict between Iran and Israel gets cleared up. I hope soon so people don't get hurt. So those are two big stories. Everything else, don't know that there was another big giant story. There were some earnings, and I'm going to go over it in a little bit, but that's the big story. And there is some news around Google Uber / Tesla, so I'm going to go over that in a little bit. Okay, so looking at the heat map, let's see what the heat map looks like. I like looking at this because the brighter the green, that means the more the gains, right? Semiconductors did great today. NVIDIA continued to flourish. Broadcom flourished. AMD, man, look at that. Micron went up nicely. And they announced tomorrow. Looking down here, Uber, 7.5. What a beautiful number. We've got Lam Research going up nicely. Visa, MasterCard had a good day. Amazon had a real good day. So some big stocks had really good days today. Meta went up almost 2%. Abbott Labs went up 3.6. So the market moved today. Real good day on the market. Looking at the big cap stocks, Microsoft is the biggest company in the world. It's just slightly bigger than NVIDIA. NVIDIA is just knocking on the door, trying to take over the top spot. And it may just do so because it's been going up nicely. It's up to $3.6 trillion in market cap. Wow, amazing. And for the year to date, NVIDIA is up 10%. Microsoft's doing well at 16%. Apple has been going down, and they're down 20% year to date. So I think Apple's lost its shine as a stock. It just seemed like a stock that when people doubted it, it would just continue to rise. We'll see. I think it's down 20% while its rivals are up nicely. So we'll see if it picks itself up. Amazon is losing money year to date. Not too bad. Google losing lots of money year to date, 11.9. And Meta making lots of money. Meta is the number one performing mega cap in the stock market. So good job, Meta. Meta has an awesome business. They have new addressable markets they're going to go after, principally around AI. And their existing businesses are doing great. So good job, Meta. Broadcom has done really well year to date. Tesla is down, but had a couple of nice, maybe a week or two of good gains. Berkshire is up 8.87 and hanging in there. I think it is the 10th most valuable stock. Looks like Mike, the dividend investor guy. Reddit is up huge. Yeah, let's take a look at Reddit. I did notice that Reddit did well, and I would say that Reddit has had a good month. And we'll take a look at Reddit. I've got plenty of comments around Reddit. Good to see you, Mike. Saeed, it is great to see you. Good to see you. Thanks for joining. And let me know if you guys want to see some stocks. And Mike, you also want to look at CRM. I think I missed that one. So we'll take a look at CRM. Okay, so we had some earnings. And you know what I'm doing? I'm going to hold this segment until after I look at a couple of the requests. Then we'll come back to this segment, which is looking at earnings. We did have a couple of interesting earnings that I wanted to go through. FedEx, Carnival, and AeroVironment is what it is. And we'll take a look at what earnings are going to happen tomorrow. One big one is tomorrow. So let's take a look at Reddit. So I don't know that I need to introduce Reddit a whole lot. I think maybe most people that are viewing are probably Reddit users. So you guys know what we're talking about. It's officially a social platform. It's a communication services company, similar but different than Meta. So this stock and this story here, let's see. This stock it was up about 5% today. Over the 5-day, up 5%. Over last month, beautiful. Look at that, 39.873. So here's what I like about stock investing, and I like it a whole lot, and is you see that this stock's done really well over the 1 month. Let's look at the year to date. Stock market said, you know what? Reddit's a pretty popular platform. It really just skyrocketed last year. Over the course of 5 months, 6 months, it went up 287%. That's just insane. And then the market said, well, we don't really like Reddit after all, and it went down 50%. Well, guys like me that had a chance, because this IPO'd about a year ago, and I don't like buying new IPOs because they tend to do this. There tends to be a lot of like excitement, stock goes up, and then it comes down. And I want to wait for it to come down. There's two advantages to that. First, I think it separates the short-term investors that were trying to make a quick buck, and it separates the long-term investors, where long-term investors will stick to the company because they're buying the company. They're not just buying a stock. Second, I get more information. We get more earnings reports. I get more earnings report. We've had 4 of them. I could study the data, their revenue growth, how they're doing, is their strategy working? So I get that advantage. Having said that, it really presented a nice opportunity over the last couple of months to buy into Reddit and participate in the run up of Reddit. This is looking really good. It's looking really good. And if you look at another stock, I'll open up another browser with Google. I mean, I'm going to look at Meta because this one has a really nice chart. So Meta's just crushed it, right? But you see here, the market, similar to Reddit, stock market's euphoric sometimes. Sometimes they're like, hey, we love a stock and it's going to go up. We hate a stock and it goes down. And Meta's been both a couple of times. And at one time, Meta was sold off by 76%. That's just nuts, right? And you could buy the stock here and you made 684% return. That's what's great about stock investing. You believe in a business, you understand that business, and you look for opportunities when the market says, hey, you know what? I'd like to give you a discount on Meta of 76%. Thank you. Appreciate it. Don't know what I did to deserve such generosity. So back to our friends at Reddit. It sold off by 61%. So there you go. It just got discounted. I got more information. So buying into Reddit is there. Now, Reddit, is it a desirable business? Absolutely. Here's what I like about Reddit. So I'm going to move a couple logos around just to prove my point. So I don't know if I'm going to get anybody to argue with me that Meta is a very desirable business. It has monopoly-like moats, keeps its competitors away just because their apps are so desirable by the users. And then a really bad business would be like the LA Times. I live in California, so I'm going to pick on the LA Times. Why is the LA Times a bad business? Well, 100 years ago, newspapers were great. People would advertise there. They would get distributed on corners. People would get it delivered to their homes. But now those businesses are terrible. They have no moat because news can be, found online. They're not growing. They're losing money. They're not creating cash flow. So this is absolutely the least desirable. And Reddit operates in that industry. Okay. They are in this industry. They're providing information, and it's more information and experiences that are experiential, and they can interact with one another. And the way I measure, a moat, and and then the second metric, which is revenue growth, profitability, and free cash flow. Let's go through that. So for Reddit, competition. I don't believe Reddit has a competitor because Meta through Facebook and Instagram and WhatsApp, that's for a different type of user. The Reddit user is more really focused on that topic, that community within Reddit, really locks in and sticks to that community. They like that type of deep information and deep dialogue with other members of that community. Network power, I can't say that they're all that strong. I think their brand's very good, but not great network power like Meta. But their balance sheet's excellent, lots of cash. I like their growth, 60%. I like their profitability, and I like their cash flow. So when I put Reddit, it definitely goes in the green. Now they're not going to surpass Meta. I'm not going to go crazy and make that statement. But I would say that they're like over here. They're going to operate in their kind of corner of the universe, which is big enough, good revenue growth, good subscriber growth. They can grow internationally. So the business is a really desirable business. So when the market says, hey, investors, we would like to take the stock down this amount, I pay attention. And what's cool, what's been really fun is in the community, we saw this. We saw this, and as investors, we were like, hey, licking our chops going, this is looking good. This is looking real good. And I think a group of us jumped in, and we've been making money. Now this stock, so this is over the year to date is what I'm looking at. Actually 6 months, excuse me. Over the last month, this puppy's gone up about 34.5. Over the 5-day, it's down a little bit, but over the 1 day, it's up 5%. Looking at the fundamentals of Reddit, there's a lot to like here. $26 billion market cap. You're paying, it's a little expensive. You're paying about, call it 16 to 18 times revenue. That's a little expensive. PE is really high at 214, and forward PE is 99, which is high. Analysts right now think it's about fairly priced. Now, there's a lot to like on their income statements. 64% growth rate. Very good. It's a pretty good sized business at 1.4 billion. That's a very good growth rate. Gross margins. Who would not like 90% gross margins? That is awesome. Awesome gross margins. And that's the type of business. Reddit doesn't have to pay anything for the next customer it gets. Literally, it can get 1 million new customers, 1 million new users, and it doesn't have to bat an eye. And advertisers, I think, really like advertising on Reddit because it's very specific, very focused. So margins are awesome, and it's generating free cash flow. For a young business, that's a very good sign. That just means that this business, once it gets greater scale, let's say it turns into a $10 billion business, holy smokes, they're going to be producing 10, I don't know, 8, $7 billion of free cash flow. That's going to be phenomenal because of those high gross margins. And they may be taken over, who knows? So the fundamentals look great for Reddit, which was really exciting to see the stock get sold off the way it did. Balance sheet's great. Analysts, let's take a look at analysts. One thing I like about stock analysis is it brings in information from analysts that are, stating what they think from a forecast perspective the business is going to grow. They also put a price target, and you can see that there's some optimistic analysts that say, hey, this stock can continue to go up to $220 a share. And then there's some analysts that are not bought in. They're like, hey, this stock can go down to 67. All righty. But I like the information it provides in the form of this revenue growth line. Revenue growth is really important because to me, right, is revenue growth tells me more customers use the product or service, The product and service is so good they could raise prices. Customers are telling other people, hey, you should be a user of Reddit. It's really good. So all those things are positive for the company. They're getting bigger because they earn additional incremental addressable market. So that's all good. And together, analysts are thinking it's going to grow 45% this year, 28% in 2026, 25% 2027. Those are really good growth numbers. So those are great growth numbers. And look at this profitability. It is going to jump up 82% next year. It's going to jump up 40% the year after. It's because this business is so darn profitable. As they get bigger scale, they're just going to make more profit, more cash. So that looks good. I'll share with you my valuation of Reddit. I've got it ready to go. I am, as you could probably tell by my tone, I really liked Reddit. I think it's a great company. I think it's close to fair price. It's discounted a little bit, just a little bit. And because the stock's gone up. But here's my valuation. And when I take all the cash flows I expect the company to produce using their financials and a growth rate of 40%, that scale is going to create an ability for them to grow cash flows that quickly. It creates a net present value of those cash flows of 31 billion. And that is taking all the cash flows I expect in the future. Let me make this guy a little bigger. I think that's a little hard for everybody to see. There we go. So when I take the cash flows based on what they're producing today and what's being forecasted, and I do my best forecast, right? I've studied the Reddit business, again, had a couple extra quarters beyond their IPO date to study their cash flows and set up that forecast of cash. And we get to, these are the cash flow amounts that I expect the next 4 years. And then all cash flow beyond year 4 will be in this bucket, which is terminal value. And it's going to grow by 5%. These buckets are going to grow by 40%. I'm going to discount by 8%, and I get to $31 billion of value. I'm going to add cash, almost no debt. So all the cash flow and the cash on the balance sheet is worth $33 billion. But the stock's trading at 26. So there's a 21% discount if I just look at cash flows. When we look at earnings per share, they don't have the earnings to substantiate their stock price yet. Next year, they should have it because it's going to go up like 80-some%. So maybe then this will value better. When I combine the two, I put more weight on the free cash flow method, you get to a 6% discount. So I like Reddit, and back to the desirability of this company. A company in green, I'm willing to pay a fair price, especially if I truly believe that they're in a space that's just going to get better and better and better. And I think that's the case for Reddit. I think Reddit space is going to get more valuable and more valuable because the engagement within the Reddit platform is really deep. I mean, I've been using Reddit for a couple of years, and I can tell you there's some real deep conversations with some very intelligent people that really know what they're talking about. And of course, with any platform, there's a bunch of silly talk too. But I can tell you that if I want to talk about, for example, bonds on Reddit, there's no better source. You go on Reddit, you're going to get people that know bonds inside and out. It'll be a master's class on bond investing, how to understand bonds, how bonds are valued, all that good stuff. Reddit. Would be interesting to see is if Reddit's going to create an AI app. AI app, excuse me. So Reddit's a really good, desirable business. I'm willing to pay a fair price. I don't own a lot of it, so I am buying Reddit. I'm buying it up, scooping it up, buying more of it. Because I think it's just, I'm going to wake up in 5 years, if not 10, and this stock is going to be worth far more. I think it could double, triple, quadruple in the next 5 years. It's just that type of business. So long as they continue to grow, they continue to do what they do very well, I'll be a owner of the business. So long as the stock price doesn't jump up too much. Like if it jumps up like a Robinhood, I haven't sold any of my Robinhood shares, but Haven't bought any either because it's jumped up so much. Now Coinbase is taking off on me. Again, I'm not selling any Coinbase shares, but I'll just watch it because it's going up so fast. I'm hoping Reddit does the same thing, and I own I think a good number of shares, but not enough. I'd like to buy more. So that is Reddit. It is a stock that we've talked about quite a bit. It is a stock that, what is fun is we talked about it 4 months ago, 3 months ago, 2 months ago, a month ago, and today, and we continue to talk about it. We can really follow through on what was a really good setup for a good investment, really good information, provided to the community. And then of course, everybody makes their own decision. There's no financial advice ever given on this channel. It's just good information from investors sharing their own unique experience. And I think several members have played Reddit and invested in Reddit and done well with Reddit. So good one. So it looks like, Mike, you got a comment. We got some other comments in there too that I'm going to get to in a second. I missed the bottom, but your average is 106. Nicely done. Nicely done. All right. Well, when it hits 1,000, we could really celebrate. All right. So let me catch up here. James Greaves, very nice to see you. And thanks so much for joining the channel. I know you were a member and it looks like you renewed your membership. Thanks so much. You want to take a look at Dow and Zoom. Glad to do that. Let's take a look at Dow and Zoom. And I'm going to cover CRM and then we'll get to those guys. Let me check to see if we got others. So Cream Biggins, you want to look at A-Lab and AMR. Glad to do that. A-Lab is Astera. And we've got AMR. You take a look at those. And then Mike, saw your comment on ADMA. You don't need a CCRM. All right, I'll scratch that one. But yeah, ADMA, one thing I cannot explain is why the heck the stock's going down. Now, my whole intent, as I shared with the community, both in the video I produced for members this morning and then over the weekend and previously, is I'm trying to build up cash. And I think it's a good idea, just looking at my portfolio, is to push myself to do things that are not comfortable. And in this case here, selling off some stocks that I do believe in, but I want to create more cash. I want more cash because I think the stock market's getting expensive. I think it's getting a little euphoric. And should it come down again, I want to be in a position to make money. It worked great in April. I had plenty of cash. I was able to put it to use and voila, made good money. ADMA just came up, and what I cannot understand is why the market's doing this. They have terrific fundamentals, but I'm comparing ADMA, and it's almost like, you have a team of athletes, and they're all good, and you don't want to cut any of them, but you have to cut one off the team. One has to get off the team, and this is the one that I voted off the island, and it's because, especially recently, it really sold off harshly. And I'm thinking to myself, why is the market treating this company this way? Are there threats to their business? And I know that they're in a life sciences biotech industry, and there could be companies that leapfrog them. It could just be a bunch of noise, and this stock can really flourish. But this is the one that I voted off the island. I still think it's discounted. I still think it's a really good business and investable, but I had to create more cash, and this is the one that I had to sacrifice. I sacrificed a couple others that I put in the video. So those are some comments around ADMA. So Saeed, and I don't understand the comment here. Yes, manufacturing Japanese stock, please. So did I miss something? I don't know. Do you have a symbol there, Saeed? Please let me know. I'll be happy to cover it. All right, so Yeah, yeah. So ADMA is kind of a unusual one. Okay, we're going to turn our attention to Dow, which is a materials company, and this company is very well known for like its chemicals that go into a lot of different products. They feed a lot of supply chains of companies that are manufacturing things. So Dow is in paints, it's in all kinds of stuff. And these guys here have been beaten down. Look at this dividend yield, 10%. If you look at the stock for the 1 year, 49%. Now, this is a very respectable business. And over the last couple of years, things have not been good for Dow. So let's take a look at their fundamentals and see, man, do they deserve this kind of sell-off? So it's a $19.46 billion market cap company. Its PE is high. Dividend is really high at 10%. And price, analysts think it is discounted. Okay. Now, when we look at their financials, revenue, they did have some rough years. 23, they came down off a really nice high that they had in 2021, 2022. If you recall, we had supply chain constraints or um, scarcity that created these really high prices. And I think these guys made good money. Um, so they made good money here, and they probably pulled forward some demand. And they had a really bad year in 2021 if you measure it by the contraction in the top line revenue. So that created that, and it probably set them up to be a disappointment to the market. Now they flatlined or just had a little bit of revenue loss in 2024, and then 2025, March 31st, they are down, or I should say, they only lost 2% in the trailing 12 months. Looking at the quarterly, it's pretty flat. Okay. Now, am I expecting these guys to all of a sudden start growing at 60%? No. But this stock here is a good stock that is in an old industry. And this is like classical value investing. Look for companies that are just way oversold, potentially a good buy. So I'm going to look at a couple of things. First, I'm going to value the company. I also want to make sure they can pay that dividend, because they could easily just, reduce that dividend, and it'd be kind of an unmet expectation, not necessarily just on me, but on investors, and it could sell off further. All righty. So revenue is contracting a bit. It'd be nice to see that just stabilize and maybe grow a little bit. Now, when I look at Dow, a couple of things that I want to point out that attract me to the stock. Okay. Free cash flow. You see that historically, this has been a really good cash flow generating company. Now they've hit a bad period in over the last couple of years. They pulled forward a lot of demand and cashed it in 21, 22, and it kind of left the cupboard empty for 24 and 23. But I believe they're going to start to really get their cash flow back to closer to their average. That's one of the things I'm looking for. It's easy to see when a company is growing their revenues nice and smooth, but it's another to think maybe a couple quarters ahead and say, well, if these guys historically were producing cash flows, and let's go before COVID, before all this, you know, very uh, artificial economy, big swings in economy, 2019, these guys produced 3.8 billion in cash flow. Year before that, 2 billion. These are really good cash flow numbers. So I'm going to use the average. I'm going to use an average, and that's what I'm going to use in my evaluation. And I think they're going to revert back to this average. And I'll show you that when I show you my evaluation. Gross margins. These guys are an industrial stock, so they're going to have low gross margins. So this is not an investment like I just showed Reddit or another type of investment that has super high margins. This is a different type of investment. For me, this is my way of diversifying and trying to pick up a really, really oversold stock. So this guy here, margins are going to be low. And we've got that. Okay. What are analysts thinking about the stock? So we have 15 analysts covering the stock. Some analysts think, hey, this puppy's going to double. Worst case scenario, it can only go down to 22. That's pretty good risk reward. If things go well, the stock could double. If things go poorly, you lost 20%. Well, that's pretty good risk reward for me. And on average, they think it's discounted by 30%. Let's look at the forecast that they're expecting. Now I'm liking what I'm seeing. Now I'm liking what I'm seeing. Analysts are thinking it's going to start growing in 26. It's going to start growing in 27. And Ridomatic, thank you very much, sir. You want to look at MSTR, Mr. Michael Saylor, MicroStrategy, now known as Strategy. Happy to provide a full review of that. I haven't looked at that stock in a long time. I appreciate it. Thank you. So back to our friends at Dow. So see, this investment, I'm looking ahead 3 quarters, 4 quarters. I'm trying to kind of take a logical guess at the future of Dow using the data that's available. Here's 15 analysts are saying, hey, actually 22 for 2026. They're saying, hey, it's going to start growing a little bit. That's really good. Great. Profits are going to expand substantially. All right. So 3 quarters from now, we're going to hit pay dirt. And if I could buy this stock when everybody hates it, just hates it, man, get Dow out of here. Just can't stand it. That's great. I'll buy it at 27. Hopefully it goes up to 54. So that's the kind of analysis I'm putting into it. So those are the fundamentals, taking you deep into how I'm trying to find another diamond in the rough, dust off the dirt on it, the mud, and then, take it over to, I guess, the diamond grinders, and they grind it and see once they polish it how good it is. All right, so I'm seeing fundamentals that are maybe 2 to 4 quarters from now look good. Now let's take a look at this dividend. Now I'm going to look at dividend based on historic cash flow and if they could afford a nice dividend like that. Okay, so we're going to look for Dow. All right, so here's the valuation on Dow. Let me take you through this. And you're a member now, and so you can, I share this sheet with all members, right? And I update it once a month. So 24/7, you can go look at my research. So you can look at this, you can see all the calculations. So I'm using a 4-year average. And the 4-year average for Dow is 2.9 billion. Can't argue with that. Remember I showed you 2019 was like at 3.8 billion. That's before COVID and before we had all this really weird economic, change. So that looks like a good starting point for me. Again, I'm trying to think 3 quarters ahead, and that's the number I'm going to go with. If I use that, they revert back to their average cash flow. I think they're going to have cash flows going into the future that amount to these amounts. A higher discount rate because they've had a rough go at it. So 9% versus 8% that I just used for Reddit. And when I use those numbers, $57 billion, that's what those cash flows will be worth. And that's growing the cash flows by 5%, which is a modest growth rate, and then 4% on long term. Okay. Now I'm going to add cash and take away debt. They do have some debt, but it is below 3 times EBITDA, so that's acceptable. So I have equity value of 42 billion, but the stock's only right now, their market cap's 19 billion. So it's a nice discount on Dow. This is with the expectation they're going to revert back to its average cash flows that they've experienced. Now, the question is, can they afford that dividend, right? So when we look at this type of cash flow on average, and we look at shares outstanding, 707. So I think I have room here. I'm going to take this number divided by this number. And got to change the font color. And it's $4.23 they produce once they get to their average back. That'd be like $4.27. If they're paying a 10% dividend on their stock and their stock's $27, that means they're paying about $2.70. So they should be able to pay for that dividend. Okay, and I'm going to do that times. Give me a second here, doing some calculations. So looking at their historical averages, they're paying 65% of their historical cash flow. And I think that that's doable. I think there's a chance they can reduce that dividend from 10 to maybe 4. We'll see what happens, but that's what's going on. Man, Rydomatic, new member, thanks so much for joining. Really appreciate it. So Dow, okay, this is, you know, stock investing gets really fun when we can nail finding a stock before the market generally, you know, finds it. Dow, we're like using kind of a baseball analogy. We're in the first, second inning of this investment. May take 6 months, but I think if things play out the way I think they could play out, I'm like 68% sure this sucker's going to double. It's going to double in the next year, year and a half. But we got to have that forward vision, being able to take a company, look at the type of company we're dealing with, and then be able to put it through a process that we just repeat over and over again. Looking at the intrinsic value of a stock has been done for 100 years, not an exaggeration. I'm not exaggerating there. Benjamin Graham wrote a book, Value Investor. So when you look at a stock this way, you're really treating it as it's an entity that produces profits and cash. That's what companies are, whether it's Meta, Microsoft, Dow, or Coca-Cola. It's an entity that produces profit and cash flows. So what are those cash flows and profits worth? That's what we're doing here. So that's my analysis on Dow. Let's follow it like we followed Reddit. This one's going to take a little longer. It's not as exciting as Reddit, but I have a good feeling about Dow. Let's keep following it. And I gave you guys your money's worth on that one. Sorry it took a little while. But again, now as a member, you can look at my research there. Let's keep rolling because I want to go a little faster. Now we're going to go over Zoom. And Rydomatic, thanks so much. I've got you on the list. A couple other members put a couple stocks on the board. I'm going to fly through those and I'm going to get back to it. Real quick comment on Dow. Insiders have been buying up a lot of Dow shares as well. Thanks for the comment there, Mitch. Appreciate it. And then Nichix, Zeta is a buy. And Zeta came up on the comments. Was that you on the comments? I think it was a comment on, I forgot which video. But if I have time, I'll take a look at that one. All right, let's keep going to Zoom. Now, Zoom is also a value stock. Now, Zoom is growing slowly, not as fast as it once was, but it's a super profitable entity. I've always thought these guys could be acquired. They're $23 billion market cap, $4.7 billion of revenue. So investors are paying less than 5 times revenue for the company. That's pretty low. PE is 22.9. Forward P is only 13.7. Analysts think it's discounted by 12.6%. Now, Zoom year to date, it's down 6% for the 1 year. It's having a decent 1 year. This stock, and when you look at the chart, you're like, oh my gosh, what am I looking at here? Let's look at the 5 year. Holy smokes. You see, they IPO'd, I believe, before this. We're just looking at the 5 year. And actually, they IPO'd around June 26. No, I think I'm wrong on that. I think they IPO'd before that. But during COVID, these guys became a COVID darling, going up just like this was the Palantir of 2020, because everybody went from going to work, going to school, and onto Zoom. So they just took off. But once it was known that, well, they're not going to grow at those rates forever, the stocks really sold off. I mean, really, really harshly. But over the 1 year, it's put together a nice rate of return for investors and provided nice points to invest into Zoom. Now, Zoom is a value play. It's not like Reddit growing at 60% or Meta growing at like 24%, even though they're gigantic. When you look at their growth, you're looking at 3% growth. Now, the good thing is they have always been growing. They grew like crazy amounts in 2020, crazy amount in 2021, and started to slow down. Now they're just growing probably by raising prices, and they are getting more enterprise customers that buy a lot of seats of Zoom, and they make a lot of money. These guys are buying back shares, and I'll show that in a little bit. Free cash flow is just awesome. Look at this chart, up, and it stayed up. They just make a lot of cash because they have these high margins. They have very high profitability. So this is a value stock within technology. Now, this is all fine and dandy. How are these guys going to create value? Well, they have been buying back shares. Let's take a look at share count. See if it's showing up. So we went from 307, 305 to 302. So they're buying back shares. So yeah, Ridomatic, I think the space does have competition. You have Zoom. Probably their biggest competitor is Microsoft, with Microsoft Teams, I believe. And then Google Meets is kind of free, but if you want the paid version so you can record calls and stuff. So you're right that there is competition, but they continue to grow. Now, they keep buying back shares, which is a positive. That way, all the remaining shareholders own a greater percentage of the company. So that's good. Forecast investors, some investors think this stock is unappreciated, should go up. The low point is $60, which isn't too bad. It could go up nicely or it could come down. But on average, the 27 analysts cover the stock and they think it's discounted by 12.6%. Looking forward on the forecast, just more growth, but it's going to be slow growth. This guy here is just going to keep growing. It is going to grow its profitability, not a whole lot, but it's going to grow it nicely. And they just finished their January 31st, 2025 year, and now they're in what they would call their fiscal year 2026, which will end January 31st, 2026. And their revenue is going to jump up really nicely. And maybe these guys could start paying a nice dividend. That'd be cool. Maybe that'll attract a lot more investors. So there's a lot there. These guys are making a lot of money. Now, let's take a look at the valuation I have for Zoom. I think the stock is highly discounted. But there's one thing to look at: this cash flows, right? Which these cash flows are real. This is the real thing. These guys are going to just keep making this kind of money and this kind of cash. So they're going to keep loading the balance sheet with cash and have no debt, keep buying back shares. And at some point, I think these guys are going to be acquired, because you have a company that's market cap 23 billion. They have almost $8 billion of cash on the balance sheet, which means their market cap's really a little over 15 billion. Somebody acquired them. They acquired them and they acquired that cash. So it just looks like a whole lot of value in this stock, but the market isn't excited about Zoom. It's not Palantir. It's not Robinhood. It's not, fill in the blank. It's not a quantum computing stock. It's not a nuclear power stock. The market gets really excited about a certain type of stock, and it just really gets, it really gravitates toward that shiny object. And Zoom just is not in the psyche of the market. Maybe it will someday, and maybe these guys will be acquired. Maybe another bigger business might say, we want the Zoom business. Maybe an Adobe, maybe somebody that's bigger can come in and say, we can do a lot with Zoom. We'll acquire them. We'll pay investors a 50% premium, take over the company, and take over all this profitability. So that's Zoom. And again, you're a member, so you can go 24/7 on the folder that I share with investors, and you can look at my research. So thanks for asking. All right, let's keep rolling. So A-Lab, let's talk about A-Lab. That's one of my favorites right now. This A-Lab does have a lot of attention for a little small cap. When you look at A-Lab, it's a little company, 14 billion compared to the giants like Nvidia at 3.6 trillion. But these guys are 490 million in revenue. So they are, if you look at price to sales, you're paying about 29, 30 times sales. That's a little expensive. But we'll look at the revenue next. PE is really expensive. Forward P is 63. Analysts say it's discounted a little bit. Now let's look at the volatility on A-Lab, which is going to make your head spin. Holy smokes, what's going on here? Now the market really was excited about the semiconductor stock that does semiconductors that enable big data centers to communicate across other data centers. It's a real big necessity because companies are putting big workloads into data centers like AWS, and they might have multiple clouds, like they might have Microsoft Azure, and they need those clouds to communicate with one another. Astera Labs has a leading technology to do that. They produce a semiconductor, and data centers really need their semiconductor. So it went up really nicely, 283% over the course of just a few months. But then the market, like mentioned, I mean, we've seen a couple of examples, it just sold off the stock. Well, this is kind of going to sound the same, right? Well, I looked at the stock and I thought it was a really neat company. And when the stock market starts pricing it really low, hey, give me some of those shares. I'll take some. Thank you very much. It's like, going to a buffet with just delicious food, and it's all gourmet. And the stock's up 64% over a couple months. So it's really beginning to work. And we caught the stock at a low point. It's a great company. Why is it great? Well, let me show you why it's great. When you look at revenue growth, 200%, nicely done. Astera Labs, 200%. Geez, that's nuts. $490 million of revenue. Now they're still a little company, but 200% is 200%. Looking at the quarterly, as the number gets bigger, the percentage is going to come down because of the law of big numbers. Now, their gross margin number is excellent at 75%. Really nice gross margin. This is a semiconductor company that is a fabulous semiconductor company. Has our friends at TSM produce their semiconductors over in Taiwan, and then they distribute them to companies that want to buy them. Now we have data centers being built left and right, and these guys are being installed on those data centers. They already produce free cash flow, which is a very good sign for little businesses that produce cash. That means inherently this business is going to produce cash. As they get bigger, they're going to produce more cash flow. And they don't have a big foundry to produce semiconductors, so they don't have to throw a bunch of capital into their business to grow. So these guys have really good free cash flow margins. That's what excited me about the company. We have 15 analysts covering the stock. Some believe it can go up higher. Some believe it can go down, but not too bad, not too far down. And it is discounted a little bit. This stock has had really good days, but recently, I think today was down. Maybe yesterday was down as well. Maybe today was up and yesterday was down. Now, as we look at what is forecasted, This year, they're going to continue to grow at 80%, then 29, then 31. So they're going to get nice and big. They're going to hit the $1 billion mark probably at the end of 26, beginning of 27. That's going to look really good. And these guys are a takeover target. This is, I mean, NVIDIA can buy them, Broadcom can buy them, Qualcomm can buy them. A lot of businesses can buy these guys because they're small enough to buy and put into their portfolios. So when we look at A-Lab, and I forgot who asked on this one. Was it Saeed? This one here, right? This is not a stock. This is a stock we cover, geez, every week because it's fun to watch it, right? It's fun to watch it go up and down. And here's the cash flow I'm forecasting based on their size they're going to be. When you look at this bucket here, think of 12 months going into the future. It's not rear view mirror. What did they do for the last 12 months? So that's my forecast for the next 12 months. And they should grow that cash nicely over the next 4 years and then stabilize and grow at a good clip, but they won't be growing it very much. But years 1 and 2, I think, are going to grow very fast. And then from there, they're going to slow down, but still grow quickly and be at a really good clip. So when we look at the valuation of the stock, we discounted by 9%. The intrinsic value is 17 billion. I add cash, you don't have any debt on the balance sheet, very good balance sheet. We have all those cash flows are worth 18 billion. The market cap is 14.3, so it's about a 21% discount on cash flows. Earnings per share using a 48 PE with that really high growth rate, I get to about an 8% premium. So as they become more profitable, that'll show better fundamentals and will show better valuation there. So right now it's not a big discount. I'm actually agreeing with what the analysts are saying. So I'm at 13, they were at 12 point something. So this one's exciting, but I think some of the gains are in the stock already. You know, it's not like we were sitting here just looking at it, licking our chops going, man, if you're going to price this stock way down here, it's a buy all day long. Now that it's gone up nicely, some of that discount is kind of been consumed by the greater stock price. But this one's a volatile stock. You know, it's it's not a smooth ride to be in Astera. Over the last month, it's down 10%. And look what it did. I think it was yesterday. No, over 2 days, it's gone down 13.6. So for all you know, Astera is going to be trading at $70 like in a month. Could be possible. This stock's a small caps, very volatile. But I think inherently this is a really valuable business. And for me, it's worth investing in. I'm doing well in the stock. I'm sticking to the stock. I'm buying more shares on pullbacks because I think these guys they really are dominant in that little space of being the good semiconductor that enables big clouds to communicate with one another. And I think that's in big demand right now. So that's Astera Labs, really cool company, really neat company to cover. And it is a really good winning stock for me this year. I'm doing really well this year, outperforming the S&P by a big margin. And I can think, you know, stocks like Robinhood, Coinbase, Meta, and Astera Labs. Astera Labs up nicely for me. Just to take a quick glance. A-Lab is up 33%. So that's a pretty good return year to date. Helps me outperform the S&P. All right, let's keep rolling here. We got lots of stocks to cover. Let's keep going. Next one we're going to look at is AMR. Now this one here is in the material space. These guys do the coal that goes into steel production. And this stock is really been beat up, really beat up. It really flourished really nicely for a while, but then it just got sold off 74%. Now, historically, this company makes really good profits. And what I was trying to do with this stock is catch it when it's super sold off as the market for this particular commodity turns, this stock would start to perform. So far, that hasn't happened. But let me take you through my research of this stock. And I'm going to start with the valuation on this one, and then we'll get back to the fundamentals. So this stock here is owned by a super investor that I covered, and it gave me the idea. And what I'm trying to do here is look at how are they going to do with cash flow and their profits. And their cash flow is good, even though the market just hates coal companies right now for some reason. I think this stock, just the way you look at it, it's so oversold that it just has value there. If they're going to produce steel, produce coal that goes into the steel producing ecosystem, these guys are going to produce really good fundamentals to the point where, for the next 12 months, 419 million, and then grow from there. Really modest growth rates on terminal value of 3%. I'm going to discount it at a higher discount rate since they are in a material space. It's been beat up. It's maybe riskier. So I want a greater rate of return. So when you look at my model for all the members, if you're a stock investor, if you're an investor, period, you got to know net present value, NPV. As an investor, it's like if you're a basketball player, you got to practice free throws. You know you're going to have to make some free throws in a game. You have to know net present value. You need to understand what it means. Why is it used? What does it symbolize? Why do we use it? Got to know it. And that's what I'm using in this field, this cell. Net present value of all the cash flows in the future, discounted by this discount rate. If what I'm saying doesn't make any sense, please use whatever AI tool out there. Explain net present value and know it cold. Very important. All right, because net present value of all those cash flows, 6.6 billion. Add the cash on the balance sheet, no debt. It's a good balance sheet. So this business is worth 7 billion, but the market cap is like, this is like a stock that, you go to that discount retailer, like they already discount all their merchandise, but way in the back they have a corner where they're like, we'll take anything for anything in this, rack or this shelf. They pretty much just want to get rid of it. And that's what this stock is all about. So if this stock turns, it's just going to turn and reward shareholders because the stock's so oversold. That's the story on AMR. Has it happened? No, it has not happened. It's pretty much over the last month gone down 13%. And if it does move, this thing's probably going to move quickly because, again, it had at one time, it was a $400 stock. Now it's at $100. So can it get to 200? Absolutely. That would not be totally alien to this stock. It was at $200 in 2025. So it's like, holy smokes. So this is one that's kind of out there on the fringe. It's not a tech stock. I love tech stocks. I like communications, services stocks. I love financial stocks. And this one here is a little bit of a diversification play. Found it through one of the super investors that's in it and gave me the idea. So I threw a few bucks at it. And so far, it's not working. But if it does, boy, it's going to really work. And it's really based on those fundamentals. When you look at this stock, it's just has fundamentals that are, these fundamentals are not make believe. Revenue's there. The revenue's down because commodity price is down. If that commodity moves, this stock's going to move. I have an exit strategy on this stock. Stocks like these you can't hold forever because they go up and down. So this one here, it'd be like make 50% and get out. Same thing on others. Like A-Lab, I put a kind of, if it goes 25% above intrinsic value, I'm selling A-Lab. Certain stocks, I have to have that, limit because it's not a stock that I think is just going to continue to get more and more in value like a Meta or a Microsoft. Some stocks are like that. Like Uber, I think it's just going to keep getting more valuable over time. I think Uber is going to be $1 trillion stock in the future. But these guys, AMR is not that type of stock. This one is a cyclical stock. It's going to go up. It's going to go down. And when it goes up, I just want to cash in and just watch, because my expectation is it can go higher, but at some point it's going to go down. So that is AMR. All right. Now let's talk about MicroStrategy. MicroStrategy is so first, I've known of MicroStrategy before they got into Bitcoin. They're a software company. They do analytics. Let's see here. So here it is, analytics software. Okay. Now they were an analytics software company first, and then Michael Saylor really became a big Bitcoin investor, and he became somewhat of a Bitcoin celebrity. He's really quoted big time. And I really like listening to Michael Saylor. I'm a Bitcoin investor. I'm a Coinbase investor. I've done really well with that. Now, I don't own MicroStrategy. Let's take a look at their valuation. Market cap, 105 billion. So this stock, not too long ago, was much less expensive. uh, they were down here, $31 a share. Now they're up here, 10 times more valuable. Now, I didn't go into MicroStrategy because I owned Bitcoin, I owned Coinbase, and I go, okay, that's good. I don't want to go too deep into the crypto market, but this one here was an absolute winner. Let's see if it's going to go even higher, or what are the chances of that happening. Let's take a look. So my perspective, principally, I'm an investor long term, and I want to look at fundamentals. So that's what we're going to look at. But I also have invested in Bitcoin since 2017. I've been in the technology industry for a long time, and understand and believe, like, stable coins, they're going to be a part of the future. Bitcoin is absolutely a store of value. I've invested in it and understand it. So I'll try to kind of give you my analysis from a value investment perspective long term, but then also bring in the additional color as a crypto investor. All right, so market cap, $105 billion. And the revenue is 459 million, which makes it that you're paying over 200 times revenue. That's super expensive. That's not just expensive. That's like the Bugatti car. It's like $4 million when you can buy a nice RAV4 from Toyota for 30 grand. So this is a really expensive stock. They're not making money. Okay. Analysts think it's still discounted by 7%. The 1 year, it's done great, 154%. Year to date, it's done good, 30%. Okay. And we look at revenue, we actually see declining revenue. Now, this revenue is probably represented by their software business. They license software for analytical purposes, and needless to say, that hasn't been a big focus, especially for the chairman. He's been focused on Bitcoin. So we're going to look at their balance sheet in a little bit. So these guys here, this is their software business. They don't cash flow right now, so that's interesting. So really, this isn't useful. I'm not going to get to a valuation that is anywhere near 100 billion. So let's go straight to the balance sheet. And in fact, let's go into their income statement, which would probably be better to read, because if I go into the website I was on, it's going to do a nice job, but it'd be better just to go to their financials, which I think are going to be better to read. All right, so this is the recording. Now, this is a presentation. I'm going to open the presentation, and I want to open their financials. So here we go. Okay. Form 8. Where's the 10K? All right, so I'm trying to find their financials because I get they have a presentation and I haven't looked at it, but let me see if this is a recording. These are all formed 8K, June 10th. Nope, that's not it. Governance. All right. So where's your financials? I don't see a link to show me the financials, which is kind of weird. So events, presentations, news and releases, financials, archive. See if I can maybe have better luck here. Current reports. Bear with me, guys. I'm trying to get to their financials. So here's your annual report. Here we go, 10Q. Well, that was easy. Okay, so let's look at their presentation first. They're investing into Bitcoin. They're becoming like a balance sheet based company where it's that Bitcoin that we got to start tracking. So Bitcoin holdings, they acquired at 37 billion, $68,000 per Bitcoin. Bitcoins are trading at 106. So they have a nice gain on the balance sheet. Now, the way that the accounting rules work is you can never take a gain on a holding because generally accepted accounting principles are they want you to be conservative. So taking a gain on a unrealized gain on a holding would be too optimistic. But if you did have a loss, you need to take the loss. That's one of the accounting principles that they have to follow. So they're doing well on that Bitcoin. They're really worth, and let me keep track of this because I think we'll be able to value the company. So they have $37.9 billion. How many coins do they have? 553 coins. Okay, that's the number I want. And we're going to multiply that times the current price of the Bitcoin. All right. Then we have capital market activities. Now they've been raising debt to buy Bitcoin. So it's pretty interesting what they're doing. They're getting debt from the market, putting it into Bitcoin. So far it's working. So they have a yield of 13.7%. That looks really good. Here's your Bitcoin holdings in 2020, 38. There's this number of coins. Yeah, 38,000 coins, and now they're up to 553 coins. Okay. So Bitcoin Treasury Company, that's the right description of them. Okay. So we have low interest rates, which is going to help them, do what they're doing. So they have 52 billion in Bitcoin holdings. And is that at market or? Yeah, it's probably close to market. Okay. Here are other companies that are holding Bitcoin. All right, so we have that. Now let's take a look at their financials. So we have a balance sheet. That's where we want to go. So here are cash and cash equivalents. These are in thousands, so this is 60 million. Okay, this is where digital assets. This is Bitcoin. And that's what they're carrying. That's when you hear the term the book value. That's the value they have on the balance sheet. It doesn't represent market value. We know that they own 553,000 coins. Okay, that's good. So the existing software business, before they got into this Bitcoin, um, business, is worth roughly 10 billion. So I'm going to use that as part of my valuation. I don't think I have. So I have Microsoft and not MicroStrategy. So I'm going to create a little bit of space over here and just do some calculations. So they have 553,555 coins, Bitcoins. Okay, and the current stock price is 105,000. Okay. And let me go with, I'm going to just use thousands. Okay. So their Bitcoins have a value of 581 $58,123,000. Okay. Now their market cap, and I would say before they got on this, big rise, they were worth about 10 million. So this company is really hard to value because I think a lot of people are seeing Bitcoin rise and they're like, wow, man, MicroStrategy's making so much money. And they're right. But really the business, the closest I can get is the business is worth about $59 million, billions dollars, excuse me. And right now their market cap is 105. I think that gap between, let's just round up to 60 billion and 105, is that MicroStrategies have become a really popular stock. Now, is it the right investment for me? No. I'll show you Coinbase and I'll show you Bitcoin. If you are buying MicroStrategy because you like the Bitcoin balance sheet, you can buy Bitcoin. You can buy the coins directly, or you can buy an ETF that buys Bitcoins. You can do that. If you want to buy a company that is profiting from crypto, Coinbase. And you saw how popular Circle got, but I really like Coinbase because Coinbase, let me show you their valuation. And now that you're a member, you can look up Coinbase and look at my research on Coinbase. Coinbase makes money. They charge fees when people buy Bitcoin, when they sell Bitcoin, when they buy Ether and sell Ether. Now they're charging institutional investors to help them have crypto businesses. Really good business. They create lots of cash. And right now, the stock is priced too high by 24% because Coinbase stock has been flourishing. Today alone, the stock was up 12%. I think over the last month, it's up 29%. So the stock's been really flourishing and the stock's gotten really expensive. I haven't sold any shares because Coinbase continues to expand their business. They're going from just being a broker of coins like Bitcoin and Ethereum to now being an institutional player, providing services to institutions. They're going to get into stable coins. They were already in stable coins, but they're going to be more of a payment processor, payment platform. and they have a pretty good brand in crypto, so I think they're going to do really well. And then lastly, they're they are applying to be able to sell stocks on the blockchain. Really exciting. So I really like the Coinbase business. That's a business in the crypto space, which is different than MicroStrategies, which is they started as a software company. And then Bitcoin came out and they're like, okay, we're going to hold Bitcoin on the balance sheet. So um, I like MicroSailor, I like MicroStrategies, but I just feel like I'm making a better investment if I buy into Coinbase or if I just buy Bitcoin. I own Bitcoin. So when Bitcoin goes up, I make money. I started buying in 2017. So what I bought back then was done really well. I continue to buy. I haven't bought in a while. Actually sold some of my Bitcoins recently to create some cash. But I own Bitcoin. I own crypto, Coinbase, excuse me. And that's my play into the crypto space. MicroStrategies hasn't made sense to me because the balance sheet doesn't get me to their market cap. There's no way I can get the fundamentals to get me to their market cap because they're not even growing their top line revenue because that's based on their legacy business, which is their software business. So that's as far as I can go on MicroStrategy. But I really appreciate you becoming a member. Please ask questions. I'm sure, like, let's see here. Agree. So Coinbase and BTC, yeah, so I'm glad you're in MicroStrategies first because I showed the chart that it's pretty much 10x. So hopefully you went on that ride with them. So congratulations. But I think Coinbase has a business that is really going to keep growing. It's a real business. When you look at Coinbase and you look at their fundamentals, let's look at those fundamentals real quick. When you look at Coinbase, right? Look at this revenue growth rate. That's phenomenal. That's awesome. And that's a pretty big number, 6.6 billion. So when you have this type of growth and you have a real business based on a super fertile market, crypto just keeps getting bigger. Coinbase continues to have competitive advantages in that space. They're a really good brand, trusted by huge firms like Charles Schwab, Vanguard. Those guys have been around for 100 years and they're like, we want to have a crypto business. Let's partner with Coinbase because they're the number one name in the space. So Coinbase has a terrific business in crypto. So that's why I invest in Coinbase. It gives me exposure to crypto and I own BTC. So that's my play. But I'm so happy that you made money on MicroStrategies. I'm a fan of Michael Saylor. I've listened to his speeches and love to hear him talk. I love his whole when he talks about history and how, the history of store value and stuff. Oh man, I eat that stuff up. But I've made my choices and I just shared my choices in crypto. Thanks so much. It's great to have you. Please join the investor calls. Would love to get your thoughts there. We have them 3 times a week. And I'll make sure to invite you on those. And of course, live streams like this, where you can put in symbols for me to look at. Mike, the dividend guest guy. Yeah. So you like BTC as well. Very good. Okay, so let me try to catch up here, guys. I'm a little behind on comments. I've been trying to fly through these symbols, these tickers, and I'm sorry if I've neglected some of your comments. So thanks again for the super chat, Write-O-Matic. And Write-O-Matic, my email address is victorhinvesting@gmail.com. If you can send me an email with your email address, I'm going to invite you to the investor calls, and I'm going to give you access to a folder with the valuation tools that I showed, as well as a copy of all my research. I post that once a month, as well as other tools. So please get that email to me when you can. And I think James, you rejoined, so I think you have access. But please email me if you don't have any access to those member tools. Thanks so much for rejoining. When the member calls have been awesome, by the way. We cover a lot of ground. We get multiple opinions on stocks, and they're really worth attending. Okay, so Saeed, you want to look at MFG. MFG, Mizuho Financial Group. So these guys are Mizuho Financial Group, together with its subs, engages in banking, trust, securities, and other businesses related to financial services in Japan and the Americas. Okay? So they're in financials in Japan, 65,000 employees. So I'm going to just take a peek at their website. I'm hoping that they have an English translator. Here we go. All right, rescued by technology. Okay. So I'm trying to figure out what kind of products do they sell? Are they brokerage? Do they sell annuities? Are they? So here we go. So they're a bank, securities, research technologies. That's probably a platform. Okay. So this is the kind of an integrated bank. This is like a JP Morgan over in Japan. All right. Okay. So, and I know that I think, Saeed, you're not in the US. I think you're in the UK. And now I get access to invest in banks here in the US. I'm in the US. So I choose to invest in one bank in the US. It's Citibank. And one of the questions that I would probably on an investor call would be best, but why would you look at a bank in Japan? Is there a reason there? Do you feel optimistic about their economy? Is there something there? I know Warren Buffett's made a lot of money in Japan recently, but I don't know a ton about their banking industry. But let's take a look and see fundamentally if this is a good bank. When I value banks, and this is the right way to do it, is I don't value based on free cash flows. I value based on earnings per share and book value. That's how you value banks. You need to take a different course, different path, because banks just are different. Banks are in the business of they take in deposits, maybe they pay a low interest rate, maybe 3-4% currently, and then they lend it out at 7-8%. And that differential is net interest margin. That's how they make money. So you can't necessarily measure that with free cash flow. It's not like manufacturing something or providing a service that's a pure play service like a Reddit. So having said that, let's take a look. Now this is based on US dollars, okay? And there's $69 billion market cap. Revenue is $26 billion. So a little more than 2 times revenue. PE looks low, 11.75. Okay. And dividend is pretty good, 2.51. Okay. So now we're dealing with the Japanese yen, but we can look at growth rates. So their net interest income has grown. So that looks good, 17%. And then after that, they have non-interest related income. Here's their trading activity. So it looks like they have like a brokerage and they have an investor platform like a Charles Schwab, an E-Trade type of, or Robinhood type of organization. And you see that their income from trading activity matches their net interest margin. So it's a very big part of the company. Okay. So non-interest income is 1.6, I'm going to guess, trillion yen. And then Total non-interest income, almost 3. So total revenues is this amount. Now, it's good to see the growth rates. Now I'm going to flip to this view. And actually, it's not going to give it to me. Oh, no, it is going to give it to me. Sorry. So this converts it to US dollars. Okay, USD. That's one of the nice things about stock analysis is now I can look at the income statement in US dollars. So revenue 26, profit, gross profit 26. That doesn't make any sense. But okay, let's keep going. So net income is 6 billion. And earnings per share is $2.34. Okay. So if we look at a company is $2.34, their stock price. So I'm gonna have to really research this one because these numbers are not making sense. There's no way you can have earnings per share being $2.60 and the stock price is $2.34, but their stock price is $5.60. That's like 40 some odd percent of the stock price. That's a huge revenue. Excuse me, profit. So I'm gonna research that. Balance sheet. I want to look at book value and see if they're growing their book value. Although they're a mixed bank and brokerage, but let's take a look at book value. So book value has been growing over time. So that looks really good. Now this one's a tricky one. Banks are not there. I don't value banks, and nobody should value banks this way. Let me show you how Citibank is valued. See how Citibank, I'm looking at earnings per share, and I'm looking at book value. And this takes, it's laborious and tedious, and it's not simple. So I'm going to take this one as a homework item. And Saeed, I'll include it on the next live stream, or I'll create an individual member-only video and kind of do this as kind of a side project. But this one here is going to be a little too tricky to just do on the fly. Sorry, I can't finish it, but it is going to be on my list. So it's in Japan. It's in yen. I want to make sure I use the right numbers. I know that Warren Buffett, he has some Japanese investments, and I went through the trouble of researching his Chinese investments. These right here. Does he own that bank? Nope. And boy, man, it really put me through a lot of work, but I was glad I did it because then I could look at Warren Buffett's portfolio correctly and then put him on the rankings. So sorry I couldn't finish that one, but I will do it as a side project. All right, so let's keep rolling here. Man, we got a lot of activity on the chat. We got a couple new members on the stream. Thanks so much. Nichix, Zeta, I'm not going to have time to look at it. I'm sorry. Mitch, good to see you. Cinematographers, good to see you. So a long time ago, was I managing my portfolio as frequently as now? No. 2 reasons. One, access to systems and technology and data just didn't exist. 2, I was working my butt off trying to, I graduated college. I was trying to make myself more valuable. Mission accomplished. I made myself a lot more valuable. And but now with so much access and so many awesome systems, I can do it. So Circle is being dumped. Now Circle's had a huge rise. Now, as mentioned a few times, I prefer Coinbase. I think Circle's neat. It's a stable coin, but I think investors are way too enthusiastic. Now, I showed a number of charts that show this type of chart. Let's go with Coinbase. So Coinbase goes public. Investors love the stock, man. Coinbase is awesome. And then, well, we changed our minds. It's down 90%. This type of sell-off after IPO is very typical. If you look at 100 IPOs, 80, 90% of them are going to look like that. So I'm waiting for Circle to have that moment where it just goes down. And you give me a couple more earnings, and I could really truly see what kind of business we have and compare them to Coinbase and see if it's a good investment. So yeah, it's interesting what it's doing. We went over A Lab. Ben Jones, thanks for tuning in. And Ben, if you want to become a member of the channel, I cover stocks that for members or $5 super chat, and then I could cover that stock. So that's how I cover the live streams. Thanks so much for tuning in. All right. And thank you, Rydomatic, for your comments. All right. So Shadow Guy, keep an eye on AMRZ. And that's a spinoff from Wholesome, and that's a materials company, right? And I don't see it there. Is that going to be a new symbol? AM. For some reason, Google doesn't see these new stocks. Yeah, this one just IPO'd. This is a new IPO. It released yesterday. And it's up a little bit. That's good. $29 billion market cap. Not a lot of data on it. So yeah, I'll keep an eye on it. See how it does. Awesome. All right, great. So I think it's a good point to conclude the live stream. Man, what an awesome live stream. We covered so many stocks: Reddit, Dow, Zoom, A-Lab, AMR, MicroStrategies, MFG, and I owe Saeed a little bit of research there. And we went deep on some of these stocks, had really good conversations around Coinbase. Thanks so much for tuning in, everybody. Ben Jones, keeping the stream alive with the super chat. Thank you, sir. Appreciate it. Well, the customer is always right. Irene, or Irene? Never seen this stock. Let's take a peek. Okay, Iran Limited owns, operates Bitcoin mining centers. So a Bitcoin miner. So they have high performance computing solutions, including AI cloud services. Company was formerly known as Iris Energy Limited. Okay, cool. And they may be, some of these miners have kind of diversified and are saying, hey, we'll also take your AI large language model workloads because we know how to operate GPU superclusters. So they'll take those kind of workloads. Some of them are doing that. These guys, just take a quick peek at their website. So data center is done sustainably. So maybe they're near a source of power. That's what they're probably doing. They're getting near a source of power. These guys up in Iceland. So they have renewable energy there. Now they could do a little bit of cable work here. That looks a little messy. That looks a little bit like if I did the job, it looked, like this, but I try to make it look nicer. So they're in British Columbia, Canada. They're using hydropower. So what is their, competitive advantage? How are they going to do this and be different? So we are a responsible way to power Bitcoin, AI, and beyond. We own and operate next generation data centers powered by 100% renewable energy. We target regions where there's low cost, abundant, and attractive renewable energy sources. So they're probably using hydro, right? Hydropower, where you use a giant waterfall that generates just massive, consistent power. That waterfall doesn't stop. It doesn't get dark and the waterfall says, oh, got to take the night off. No. So that's a really good idea. Now, I want to just make sure that my logic is correct, that they use hydro. So Bitcoin GPUs, they use H100s from NVIDIA. So I'm obviously, guys, hydro. So they're using hydro for power. So, so a couple of things up in Canada. One of the things that you got to have with these GPU data centers is they create a lot of heat. And if you have a cold climate, that helps you because then you don't have to spend as much money cooling. Cool. And let me continue on. So I'm going to look at a couple of things once I'm here. Investors, all right, cool. Let's see if I can get a nice financial statement because when I look at these companies and I've looked at these closely, as mentioned, I invested in Bitcoin, so I know enough to be informed. And sometimes generally accepted accounting principles don't give them credit for their Bitcoins on the balance sheet. Well, I do because I know those Bitcoins are worth a lot. So they're giving me a bunch of statements that I don't really care about. How about some SEC filings? Where's that 10K? Where is it? So this is a foreign issuer. They're up in Canada. So SEC filings. So they're Australian. See if this is going to give me my financials that I'm going to want to see. So bear with me, trying to get some financial statements. Come on, internet. You can do it. Okay, let's see here. Nope, not there. So, okay, I think this might work. There's cash flows. Okay, so this is their financials. So I'll be able to really go deep into their financials and um, see what's really there. So that's their income statement. And then they're Australian, so they call balance sheet financial position. Means the same thing. Okay, so let's take a look at the company just at a high level, and then we're going deep. $2.7 billion market cap, US dollars. Revenue 377. Not very expensive. 8 times revenue, not bad. They don't make money this year, but they're going to make money next year, and it's going to be really good. Analysts think it's really discounted. So Bitcoin miners have not been getting a lot of love. So I know other Bitcoin miners are out there. They've been trying to move into doing AI large language models. And if you look at CoreWeave, they were a Bitcoin miner and then they changed their business and now they're an AI company. Well, they were really good at running GPUs. And that was a good idea. The CoreWeave IPO has done really well. They have a lot of debt. I don't like the stock, but that's an aside. Let's look at this Bitcoin miner and see what they're all about. And eventually, I think these, if you can buy them really discounted, it might be a good holding. It might be a good hold. I'll also give you another idea because I've got another one or two Bitcoin miners out there that you can take a look at. All right, so we are looking at that. Okay, revenue growth looks really good, trailing 12 months. Now they have revenues, and these are in millions. Okay, so they're not gigantic, right? They're kind of small, but they are growing really nicely, up to $377 million over the trailing 12 months. That looks good. The growth is there. Okay. Okay. Gross margins look fantastic. Free cash flow, no free cash flow. They're probably buying a bunch of GPUs and putting them into their data center. That's why I wanted to look at their financials because that way I could see what they're doing more closely. 11 analysts cover the stock, and they think it's discounted by a big amount. They think it's a $19 stock and it's trading for 11. Okay. The forecast is 14 analysts are looking at the forecast for 25, 13 for 26. The growth is going to continue into 26. And they're going to be profitable. Their fiscal year 25 ends June 30th, so it's going to end in about a week. And they should turn a small profit. But next year, that's when the profits come. That looks good. And they're going to probably aim to be a billion-dollar company next fiscal year, which starts July 1st, 2025. Okay, that looks good. It does look interesting so far. Now let's take a look at the financials and get into the nitty gritty. So revenue, all right, and this is US. Okay, very good. And let me take a look at one more thing. So they are headquartered in Australia. They were founded in 2018. Okay. And Australia, for me, is very investable. I've invested in Australia. It's pretty solid, but I'm not an expert. I would just say the investments I've made in Australia have been fine. And they obviously have a similar culture to the US where I reside. Okay, so Bitcoin revenue, and look at this, AI cloud service revenue. So they're beginning to serve that AI business. So companies are like, hey, I need GPU capacity to build my large language model to do all this AI build out. Hey, we know how to run GPUs. What do you want to borrow? You want to have a cluster that has, 50 H100s? We got that for you. We can run it. And they can connect in and use that capacity for 6 months, 18 months, however that looks like. So that looks good. Other income, I'm not sure what it is, but they're still doing Bitcoin mining. Okay. So that looks good. So they're losing money. Keep in mind, see this depreciation? That's mainly they bought a bunch of GPUs and they have to depreciate them based on an accelerated useful life. GPUs, my guesstimate is they're probably going to last 3 to 6 years, maybe a little longer. And it's not the case of maybe they are still functional 7 years from now, but the new technology is so far better, customers just want to use that. So having said that, they have a lot of write-offs due to depreciation. These are GPUs they already bought and equipment they already bought. So when you remove this 50 billion of depreciation, all of a sudden you see a very positive number here. as well as here. You'd probably see a very positive number. Okay, so we got through the income statement. It looks okay. Now let's look at the balance sheet. So they have cash of 404, and we're dealing with thousands. Yeah, thousands. So it's 404 million. Okay. Okay. So this is current assets, non-current assets. They prepaid for hardware. Okay. So they're not carrying any Bitcoin on their balance sheet. So it looks like they earn those Bitcoin and then they sell them. Good. Some other miners, they carry like Bitcoin, which that's what I wanted to check. So these guys have 404 million in cash. What's their market cap again? So really the company market caps, did they have debt? Liabilities. No, they really don't have debt. They have some leases. I don't count leases. So 404 million. So really the market cap's 2.3 billion because there's 400 million on the balance sheet. So that looks good. All right, so let me get down to where I think this business ought to land from a valuation standpoint. So this is owner's equity statement, not useful to me. So I'm going to keep going. Now we got cash flow. This is where I can value a company. Now, companies in Australia tend to report twice a year. Like in the US, we go 4 times a year, quarterly. But in Australia and in England, they'll go twice a year, semi-annual. So we have to wait a little bit, but it's the same thing. They just report fewer times. All right, let's rock and roll here. So this is the most current period. Year ended. So this is consolidated cash flows restated for years 2024, 2023, 2022. Okay. And this is a little bit aged. Kind of wish I would have the one that is for December 31st, the semi-annual one. So here they have, so cash from operations. This is receipts. They're paying a lot. Payments for electricity, suppliers, electricity. Receipts from AI. So this should be up here because they're mining the Bitcoin. It should belong up here. And then this is their cash outlay for all the new GPUs and all the equipment they're putting into their data centers. Okay. So this one isn't going to get it done for me because it's not current enough. Let me try to use this here. Okay, so man, they're in build out mode. So they're not generating free cash because they're spending so much money on GPUs. Good news, they're growing fast. These guys are kind of like, I think these guys are better than CoreWeave because they don't have a bunch of debt. So I like them more than CoreWeave. I can't get there from free cash flow. I think I'll eventually get there with the earnings per share figures. So when we look at their earnings per share, this year is about to be done. So if I use 85 cents per share and do a valuation, let's see where we end up with. Free cash flow, I think it's going to be a little while before they're free cash flow positive because they're spending so much on the data center. Here's another stock to consider. Bit Digital is discounted. Same business, doing the same thing. Bitcoin mining, and they are doing AI services now. And these guys are discounted, but they're so darn little that the market doesn't pay any attention to them. The one we're looking at is bigger. So and then CleanSpark is also another company to take a look at. But let's take a look at the company you asked about and kind of finish a nice analysis of the stock. So I can't value them based on free cash flow because it's just too darn negative. Eventually, when they start cranking out some cash, we'll be able to do that. But for now, we use earnings per share. I do like their revenue growth. If you're very optimistic about the space, believe that, hey, crypto is a really good place to invest. That could really change the way that you invest in a company. And when we look at these guys, what's their official name? So IREN Limited. So these guys are risky. So I'm going to go with the 11% there. We don't have any cash flow. So this guy needs to be a 0. And it just becomes non-usable. But we said it was 85 cents a share. They are a high growth business, really good growth. So I'm going to give them like a 48. What's going to be their forecasted growth? So they were going to grow like really fast in 26. And why wouldn't they grow more here? So, okay. So I mean, based on this earnings per share, this stock is really discounted. Even if we said 36 PE, it's really discounted because the hyper growth, they deserve a high price to earnings ratio. So they would be very discounted if we use this formula, which is looking at profits. And I think the reason I use the PE ratio discounting is exactly this reason. When you find these young companies and they're in the right space, trying to build out a business in a really fertile market that's constantly expanding and getting bigger. And they have to continue to invest in the business. So they don't have any free cash flows. It's not like an old business like Dow that we looked at. Therefore, I use earnings per share valuations for this reason. If you depend on earnings per share, this is an investable company. It's 69% discounted. So if you do your due diligence on IREN, you believe in the business, you're like, these guys really know their stuff. Customers love them. They're going to keep attracting more and more workloads, especially on the AI side, which is probably going to be a little more sustainable. But hey, Bitcoin is trading at $104 per coin. That's pretty good too. Now, you would think that Bitcoin miners would get a little more love because we saw MicroStrategy, they're up 10x. You got Coinbase going up. You got Circle flying off the charts. Well, these guys that are mining Bitcoin, they're producing coins. So how about a little love for these guys? But for some reason, the market just has been ignoring this space, which might be an opportunity to buy when it's being totally ignored. And then if the market ever wakes up and says, oh no, Bitcoin miners are the place to be, Shazam. Now, the thing I like about Iran is that they're going where the power is, right? They are going where the hydro is, and that's a very affordable, low cost, consistent way of getting power. So that makes a lot of sense. So that's the valuation I can give you. This one is not useful because they don't have cash flow yet. Once they get close to cash flow and we can forecast it, we can get better at this. But for now, we can just ignore it. This is a new business. It's a young business. Let's just go with looking at earnings per share. Okay. And I'm going to watch that stock. And again, keep an eye. If you become a member, you'll get this sheet is a copy. I email you a link. You go to a shared folder, and you can look at my research. Bit Digital is an interesting company to look at. Same business. They're just smaller, but they're making money. Of course, there's Coinbase, and then this business is also interesting. And look at these discounts, but the market's been ignoring these companies. I don't quite get it. You know, I've showed you a bunch of charts where the stock market does some weird things, like Reddit, sell it off by 60 some odd %. Really? Reddit? That's a great business. So I'll buy up Reddit shares. And then quickly the market responded and started rallying the stock. So keep an eye on those. But thanks for asking about this. Hopefully this was useful to you. I appreciate you bringing up a stock that totally new to me. And please contact me if you have any more questions on this one. Thank you so much. All right, guys. So this was an awesome stream. Thank you so much. And again, Ben, thanks so much for the super chat. And that was a cool stock. Hopefully you found my analysis interesting. And hopefully, you know, you do your research, and if you invest in this company, it works out for you. So I will keep this guy. I'm going to watch this stock and see how it does over time. And as they provide more financial statements, I could also update my analysis to see when they're going to get to a free cash flow state. So that is it for the show this Tuesday, June 24th. Thanks so much. This was an awesome live stream. Everybody have a great night. Good luck with your investments. Let's see if the market rallies again tomorrow. Thank you. Bye-bye.